everyone, and welcome to Tax Shorts. My name is Aisha Bedwe-Ibe. I'm the tax leader here at PwC Ghana, and today I'm joined by my colleague Christiana Osei-Mensah, who's a senior manager in our international tax team. And today we are continuing our conversation on offshore indirect transfers. Welcome to today's episode. Christiana, in our last discussion, we spoke about offshore indirect transfers and it was so technical and so detailed that we thought it would be a great idea to do a part 2. So here we are. So perhaps you can take us through the actual details about how the Income Tax Act of Ghana actually taxes or has specific provisions for taxing these kind of transactions in Ghana.
Thank you, Aisha. Yeah. Yes, you are right. Ghana introduced the taxation of indirect transfers on 1st January 2016. The specific provision in our Tax Act 2015, Act 896, states that where the underlying ownership of an entity changes by more than 50% at any time within 3 years, the assets and liabilities of that entity immediately after the change is deemed to be realized.
Right, okay. That's pretty straightforward, but I'm sure the application is more complex than that. I know there's an issue around loss of tax attributes. Maybe you can talk a bit about that.
Yes, so in addition to the taxation in terms of the gains, an entity that changes ownership in that manner loses their tax attributes. We are talking about losses carried forward, financial costs carried forward, and bad debt written off.
Wow, that's going to be quite a big concern for investors. Okay, so perhaps your parting words or closing remarks regarding specifically what tax resident entities in Ghana should do. How can they manage this whole process?
So this section is all about compliance and making sure that you are able to plan and manage your cash flow. So our recommendation to entities in Ghana will be to track and monitor the changes in the underlying ownership. This is for planning purposes. And 2, there is also the need for them to consult extensively where they have triggered this section. In so doing, they'll be able to know the tax impact and also be able to meet the compliance requirements.
Okay, I think you really touched on something very important, consult extensively. And perhaps I might also add, they need to really be in close communication with their parent companies overseas, so that these changes can be discussed between both parties or all parties and they can prepare adequately. Thank you so much, Christiana, for that quite detailed and technical discussion. I'm sure everybody listening will be better prepared for such transactions. And thank you all for joining us today. My name is Aisha Bedwe-Ibe. I'm the tax leader here at PwC Ghana. Today I was joined by my colleague, Christiana Osei-Mensah, who's a senior manager in our international tax team. And we're talking about the taxation of offshore indirect transfers. Thank you so much for joining us in this second part of our discussion. See you at the next episode. Thank you and God bless.